Investment bonds, or also known as insurance bonds, are after-tax structures and can be used to invest for different purposes. There are three different types of investment bonds. One is just a traditional investment bond. Secondly is a funeral bond, so to put away some savings aside for some prepaid funeral arrangements. And thirdly is education bonds, related for education purposes. Although there are different types of investment bonds, they all have the exact same structure in that they are all after-tax paid structures, meaning that all the investment earnings, any income, any dividends, and any capital gains tax is all internally taxed within the bond at the headline rate 30%. Now, although that the top headline tax rate of the bond internally is at 30%, depending on what type of investments you have within the bond, and it can be invested in cash, it can be invested in term deposits, it can be invested in fixed interest, shares and property, or a mixture of all those different asset classes. If you have some Australian shares that might pay out franking credits, generally the effective annual tax rate of the bond could be a little bit lower than 30%, so a lot more attractive than potentially your marginal tax rate. So why consider an investment bond, a funeral bond, or an education bond? Well, it really depends on what you're trying to achieve and the purpose of the bond itself. If you are looking to build wealth and complement your existing retirement plan or your existing retirement assets such as superannuation, an investment bond vehicle might be a very attractive option, especially if you are using superannuation to its advantage, such as contributing up to the concessional contribution caps each year. You can use any excess savings that you have and you can invest this into an investment bond. Now, the investment bonds, although they have a top tax rate of 30%, it's generally a lot lower than potentially your marginal tax rate, which can get up to 45%, not including the Medicare levy. The other benefit of the investment bond is that any investment earnings you don't have to pay personal income tax on. So any income, any dividends, any distributions, or any capital gains tax, you don't have to declare or pay tax on in your personal name, given it's all internally taxed within the bond structure. With the investment bond as well, from a tax advantageous perspective, is that after 10 years of owning the bond, you can make withdrawals completely tax-free. There is no capital gains tax on the withdrawals on the bond after owning the bond for 10 years. Now, you can set these investment bonds up in your own name. You can set these up for your children or even grandchildren as sort of a future fund for them. And it could be on their 18th birthday. It could be a nice deposit for a home or even a purchase of their new car. Now, the other benefit of the investment bond is that in that example, if you are setting these up for family members, for children, for grandchildren, any of the investment bond's capital plus any investment earnings, you can actually transfer that to the beneficiary or to a nominee of your choosing. It's called a future event transfer date. That can pass to them completely tax-free. Other considerations with the investment bond is the flexibility with estate planning. So with the investment bond, it does not form part of the estate. So generally what we see, it does avoid probate delays and potential challenges to the estate. But the main advantage compared to other financial assets held personally or superannuation death benefits paid to a non-dependent is that the investment bond or the bond can be transferred tax-free without any tax consequences or resetting of the 10-year tax-free rule. The other type of investment bond that I mentioned is a funeral bond, so setting aside some prepaid funeral arrangements that can still be invested as per your risk profile, or it can be all invested in a conservative fund, a balanced fund, or a growth fund, just depending on your circumstances. Now, the benefit of prepaid funeral arrangements is that in the eyes of Centrelink, any prepaid funeral arrangements are generally exempt. Now, in a funeral bond structure, there is a threshold on how much you can invest up to, and currently that threshold is at $15,750. You can invest. Now that's per person. Obviously, if you invest into a joint funeral bond, then the threshold is only $15,750. But you can, if you're a member of a couple, you both can set up your own individual funeral bonds each of $15,750 each. Now, the benefit of that is you reduce your assessable assets in the eyes of Centrelink, and you might be able to get some extra Centrelink payments on a fortnightly basis. But then also, you're setting aside the costs of your funeral, they can generally do grow in value in line with your investment strategy, but keep pace with the cost of funeral arrangements. And the last investment bond structure that I've talked about is an education bond. Now, with all these structures and all these different types of investment bonds, they all have the exact same features, but they have a specific purpose, like what I talked about, is getting your purpose and your strategy in line before setting one of these up. So for an education bond, it has all the underlying tax features. It has the 10-year tax-free period on withdrawals, but then this is for education-related expenses. They can be set up for a grandchild, it can be set up for your children, but the main benefit is you actually get a bit of a tax advantage if you're making withdrawals that are education specific. So if you're purchasing some clothes, if you're purchasing a laptop or anything like that, then generally there are some tax advantages for you. And any capital generally contributed into this education bond, there is actually a separation between the capital contributed and the earnings attributed to that, which is a little bit of a different feature compared to the funeral bond, and then also the traditional investment bond. And any capital that you've actually contributed into the education bond can generally be accessed tax-free, but then there's also some tax associated benefits with taking funds out of the earnings component as well.